the Fed, the mortgage industry, and the Donbass area. Stay tuned. Hello and thank you for listening. This past week, the Federal Reserve hiked the Fed fund rate by 0.5%, which is the largest increase in 22 years. On May 4th, the Fed Chairman Jerome Powell stated, quote, "I would like to first speak to the American people. Inflation is much too high and the Fed understands the hardship and is moving expeditiously to bring down inflation." Unquote. How does the Fed move to bring down inflation? Raise rates and tighten monetary conditions. And this started last Wednesday when the Fed raised the Fed funds rate by 50 basis points. In a separate measure, the Fed will also begin shrinking its enormous $9 trillion balance sheet of treasuries and mortgage-backed securities. It is important to remember that the hike in Fed funds rate has no direct effect on home loan rates. But oddly enough, the measures the Fed is taking to lower inflation help preserve the value of long-term bonds like mortgage-backed securities. If the Fed is successful in bringing down inflation, it will help long-term bonds improve pricing and long-term rates remain relatively stable. The increase in the Fed's funds rate will immediately impact all short-term loans like auto loans, credit card debt, and home equity lines of credit. Increasing these rates is expected to slow consumer demand, which in effect will slow price increases. Powell gave the market comfort when he said that there was a, quote, "a good chance to have a soft landing," unquote, meaning the Fed can continue to raise rates more and slow demand without pushing the economy into a recession. I doubt that. How much more will the Fed hike rates? The Fed chair signaled that they are likely to raise rates by another 50 basis points or 0.5% both in June and July. Of course, making these moves will depend on the incoming data, right? So this means that we should continue to expect high interest rate volatility around key economic reports like inflation, GDP, and the labor market. In mortgage news, last year the rates were in the 3s. Now they're in the 5s. To add insult to injury, home prices are 34% higher today than the start of the pandemic. Amazing. Bad news has hit the mortgage industry across the United States. There have been more than 3,500 job cuts in the mortgage industry in the past 3 months. Wells Fargo and JP Morgan Chase have announced job cuts in their divisions totaling nearly 2,000 positions on top of additional losses. Wells Fargo plans to lay off 1,800 employees from their mortgage division 1 month after they cut another 2,300 positions from the same unit. This is according to the Associated Press. The company said that they are making the cuts because a lower number of people are refinancing mortgages than they expected. An additional 145 mortgage employees from JP Morgan Chase have been laid off in its Chicago area offices, according to Chicago Business. The layoffs were said to be caused by company restructuring and a reduced demand. Now, in good news, today is May 9th, and to you non-Russians, May 9th is Victory Day in Russia. This is the day that Russia defeated Germany in World War II. Everyone thought that Putin was going to use this day as a launching pad to further escalate this war, possibly even changing it from a special military operation to finally calling it what it is, a war. In his speech today, he did nothing of the sort. It was a very uneventful speech. It seems like the Russian generals are making the same mistakes in the Donbass areas as they did when they first started the invasion towards Kyiv. This might be the reason that Putin doesn't want to escalate things more than it is already. So even Putin, as of now, has to realize that he has a third-rate capable army. That's all that I have for you today, and please remember, life is not meant to be, it's meant to create. Too strong.